Good morning, everybody. Happy Wednesday. This is the morning show on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, as always, with you in the morning. We got a few charts to share, so we'll get right to that. We'll have John Salama on our show. He sent over a few charts. We always appreciate when our guests do that. By the way, if you have any guest suggestions, I know I do this periodically. Any people that you want us to try to get on the show, or whether you know them or you don't know them or whatever, just email us. You can email us at questions@stockmarketmedia.com, and we are always open to suggestions for people who you guys want to have on the show or have back on the show for that matter, because we like having people back if you guys like them. So that was my quick PSA of the day. Let's bring on JC. He's here, you're here, I'm here. That's all we need. Strauss will be here in a few. Let's do this.
Oh, Spencer Israel, my friend. What's up, y'all?
Not John Solana, sadly. I don't know if that's a real person. John Salama.
Oh, we got the
John,
better.
John Solana would be cool. If there was a John Solana out there, that'd be a great name. Good morning, sir. How are we doing?
I'm doing great. What were you doing on St. Patrick's Day of 2008?
Oh, God. Dude, I was in high school.
So up to no good? Naughty Spencer?
I wasn't doing anything. What do you mean? That was my junior year of high school.
Junior year of high school. Imagine Spencer, junior year of high school. So 2008, St. Patrick's Day, the day that Bear Stearns disappeared.
Yep.
And I remember standing on the corner of 47th Street in Vanderbilt. I used to work over on 46th and Park, so literally a catty corner. And standing next to Josh Brown, drinking a coffee, just the two of us, kind of like in awe. It's a brand new building, right? It's JP Morgan building now, obviously. But it was the brand new Bear Stearns building. Place is sick, still sick. But back then, even more so. And then, so there's people walking out with boxes with stuff. Then you got the parade on Fifth Avenue, right down the block. So you got all these giant white dudes in kilts playing the bagpipes. And then, of course, you're only a couple of blocks away from Grand Central. And all the kids drinking on the train on the way to the city to party all day, right? I mean, and then you got satellite dishes and like trucks and, all kinds of journalists everywhere with lights everywhere talking about the chaos that is taking place behind them. Dude, it was mayhem. Like, it was one of those like surreal moments where you look back. And then what's really interesting is looking back, okay, what was I doing about it in the market, right? So like, I thought I was so fucking smart. Because we were covering our shorts that morning. We were super short financials going into that event. I thought I was the man.
Well,
now what I didn't know, because I was such an idiot thinking I was standing there because I'm the man. Actually, what I should have been doing is buying stocks, is what I should have been doing. Instead of doing an end zone dance on 47th and Vanderbilt is what I should have, right? And so that day, the market bottomed and absolutely ripped for another like 4 months or 5 months or something like that into the summer, and then rolled over and crashed, as we all know. But that day was a big low in that cycle, and I was just too distracted to flip the trade from the shorts and go long. Like, I was still too young. I was 26 years old. So, like, I didn't know anything. Yeah. But hindsight. Wow. So a few interesting stories there, a few interesting dynamics that I want to make sure, to express. Like, I was an idiot. I was a fool. I thought I was the man. Dude, I thought I was the man. What an idiot.
I think that one of the big lessons there is in the markets, you really can never do an end zone dance, a touchdown dance, because the game never ends. So there's really no time to be. I mean, yeah, you can celebrate a win, sure, but
and by the way, every win you could look back on and see how you could have done it better.
That's no way to live your life. Come on. That is no way to live. You will never survive as a trader or investor if you're replaying the past. Oh, I should have done this. You'll never make it.
No, you got to do it. You got the wins and the losses. What could I have done better? Why did I buy that expiration so many months out? I could have bought the nearer term ones and made a lot more money. But I didn't. I bought the, right? Like no matter what, there's a way that you could improve. I'm telling you, you gotta watch the tape.
If you make money and you can't be happy, then I don't think this is for you.
If you're a golfer, you want to record your swing so you could watch your swing, whether you slice the crap out of it or, you hit it 300 yards down the fairway,
Yeah, you should want to improve.
I'm more
for
the
sure.
former
but
than the latter.
There's a balance. There's a balance. I think you gotta be happy with your wins, and if your wins can't make you happy, nothing will make you happy, and you got to be happy because that's no way to live, is not being happy. All right, let's do state of the markets and see what's going on.
I thought that was just a good recollection of the old days, the old Bear Stearns.
I don't have a single recollection prior to 2013.
I can tell you that entire day. I can tell you everything I did that day. It was a Monday. I was flying back from Miami.
Wow.
There was no Uber yet. I was taking a taxi cab from Newark, New Jersey into the city.
Damn, taxis. Those are the days. All right.
All right, ladies and gentlemen. The day after St. Patrick's Day, markets got quite the hangover here with the Dow down to Hundy. Dow down to Hundy, 47,250. You got S&P 500 futures down 20 basis points, 13 handles at 67.60 for S&Ps. NASDAQ 100 futures holding up the best, down 40 handles. That's less than 20 bips. That's 24,500, just below 25,000 for the NASDAQ 100 futures. 30-year bond futures flat, just above, just almost at 115 on the ZBs. You got crude oil flat at 95.5. You got copper down 1.5%, 570. You got gold down 2.4%, 48.86 for gold, now holding below 5,000. Silver down 2%, 78 and change, with the VIX still pushing 23 for the VIX. So yeah, you're looking at 1.5% a day for the market, for the S&P 500 in particular. So if you extrapolate that to the Dow, you're looking at about 650 Dow points per day would be perfectly normal in this environment. You got the Bitcoin down almost 2% on the day, 72,500. And you got Ethereum down 3%, 2243. You got Solana also down 3%, just under 92. With the total crypto market cap, Mr. Spencer Israel, 2.45 trillion, down from 2.55 trillion. So now we're at 2.45 trillion.
Mm-hmm.
How do we feel about this morning's futures?
I don't know. Something must have Bitcoin kind of in the last hour, 2 hours, just kind of fell out of bed there a little bit.
Maybe Jane Street is back.
Not sure what happened there.
Isn't that what they're doing over there at Jane Street? Aren't they selling it every day at 8:30? Wasn't that like the conspiracy theory? Anybody know? Anybody want to chime in on the chat?
No,
I'm not up to date on my conspiracy theories. I was on vacation for a week. Stepped away for a minute.
Yeah, I didn't hear that one. Also,
Jane Street, didn't they get busted for doing that?
What, for selling every day at 8:30?
I think they would just come in every day at 8:30 and just start dumping Bitcoin. I think that was like a market manipulation or something like that. Am I wrong? Can somebody anybody in the chat keep up on the stuff, on the things happening behind the scenes?
Oh, I just Googled. Yeah, like a month ago, they were formally accused of insider trading on Bitcoin. Is that even possible?
Someone saying 10:30. I'm not sure. Something like that.
All right. I don't know. Hey, yesterday, crude oil had its tightest range in 2 weeks.
How about that?
So how about that? Things are finally are we starting to calm down a little bit? I don't know.
No, USO still pushing up against new highs. USO holding in there, freaking unbelievable. Very impressive.
Well, yeah.
All right, everybody's chiming in. See, people know what I'm talking about. The 10:30 slam. That's what they're saying.
Right.
The 10:30 slam. There you go. Louis said it was BS, JC. Louis says BS. All right.
I didn't say that.
Listen, either way. Okay, I got 3 charts. Start with chart 4 there.
Okay.
I got 3 big ones today, guys. 3 big ones. Go big or go home. 3 big ones. And I think it's going to tell us a lot about what this spring is going to look like. For sure. For sure. So here's the first one. You got the Russell 2000 small cap index. This is 2/3 of the Russell 3000. The Russell 3000, which includes the 1,000 large caps, in addition to the 2,000 small caps, represents approximately 98% of all investable assets in the U.S. equities market. It's basically the market. It's hard to have a serious debate about weak market breadth if 2/3 of the Russell 3000 is at all-time highs. Now, to Spencer's point, pulled back 5, 6, 7%, whatever it was on the pullback, but it's less about the pullback itself and more about where the pullback is taking place. Those former highs in 21 and again at the end of 24, those former peaks, right? We exceeded those levels, and now we're back to the scene of the crime. So are we looking at a massive failed breakout here that we're going to tell our grandchildren about? The great whipsaw of 26. Kids, let me tell you about these small caps in Iran, right? Is that what it's going to be? Right? We saw something similar maybe in September, October of 2018, where you got those failed breakouts and a lot of indexes and then everything collapsed. Could be like that, right? Or is it just a kickback, a retest of the breakout, and now we fire, right? Are you guys right? Are you guys with me on this? All right, now throw the next one up, right? So what do we got? We got big base, breakout, kickback. Next chart. No. Next chart.
Wait, I've a small caps question. I don't know how the answer to your question, and I don't think you do either. That's the point. But how cute was it in January? Right, January, small caps ripping to start the year. They're crushing large caps, right, for a few weeks there, and that was cute. That was cute. We actually got a couple of weeks of that, and then back to normal.
Well, right. I don't think so much it was cute, is that you actually had other sectors participating, right? Because small caps have been working for a long time, right? Biotech's had a killer year. Small cap technology has been making new all-time highs for a long time. Small cap industrials have been making new all-time highs. It was really just rotation into some of the banks, into some of the other underperforming small cap areas that were not participating, right? That's what happened in January. So now the question is, is that so let's move on. So here we got small caps kicking back potentially, or massive failed breakout. Emerging markets, big base, new all-time highs, just a kickback, or massive failed breakout, right? Next chart. Transportation stocks, right? This is the Scottie Pippen, right? To the Michael Jordan of the Dow Industrials. Is that fair assessment, Spencer Israel? Is the Dow Jones Transportation Average the Scottie Pippen, the one that makes it onto the Dream Team and the Hall of Fame and NBA Best 50 or whatever? Is this Scottie Pippen? I think it might be.
I guess. I don't really know.
Right there, does Jordan win all those championships without Scotty's D?
No, probably not.
His physicality and his quickness? I don't know. The point is the Dow Jones Transportation Average is right there also. Big base, get your breakout January, February, and now your kickback. So guys, I asked the questions, right? Jay Hampton says we got to get Scottie Pippen on the show. I'm with you. He comes to our Twitter spaces. He comes in and he listens to us talk about crypto, but then got to get him on the show, Spencer. Scotty, if you're out there listening, the Dow Jones Transportation Average and me talking about how that's you, that is a compliment to you, right? That is pushing the Dow Jones Transportation Average into an upper echelon that I think that the kids these days don't quite understand, right? So this is more of a compliment to Scotty than it is, any sort of revelation about the Dow Transports. I do think it's really that important. So those are the three. What do you guys think?
And these are the three charts that are going to set the tone for spring. That's what you're saying?
I think so. How could they not?
So we've got small caps, we got emerging markets, we got Dow Jones Transports. I think people.
Are those a solid three?
I think people would probably agree. I don't think anyone would agree with all three of those. I don't. Again, we've gone over this, but I don't.
But the point is, there's a similar situation, right? Put whichever one more important than the other, whatever. What do you guys think? Do they stick them? Do they come in there and do they stick them? Or we're going to talk about the great whipsaw of 26. You think it's that binary there, Spencer?
I'm like you, man. I don't have the answers. right? But I trust you to ask the questions. I don't know how you could talk about like the mood of the market or setting the tone without at the very least looking at mega cap tech, right?
All right, so throw up slide 2.
So
throw up slide 2 there.
to me, that just seems a really important thing.
You know, you're not wrong. You're not wrong. So here, take a look at this.
Like
bad boy
emerging
right
markets is nice and all, right? Dow transports is nice and all. They're, I'm not saying they're not important, but to suggest that like this is not going to matter, this is going to matter. This chart right here is going to matter. Yeah,
100%. So what are we thinking here? So you got the technology in blue there.
Here's what I think.
Sideways, not down.
Every time for the last 15 years, you've gotten any kind of weakness or consolidation period in large cap tech, it has proven to be a buying opportunity, right? Eventually. So why would this time be any different?
Because if this breaks, you're going to be able to buy it a hell of a lot lower. That's why. You kidding me? If that technology, if that's a massive top there in tech, which I'm not in the camp that it is at all. Looks to me like a 2010 kind of situation. S&P's in 2010. Spencer Israel, what were you doing in the summer of 2010?
Oh God. I was interning for my local newspaper, man. Oh God. I don't want to think about those years. Whew.
Yeah, but don't you appreciate those experiences? Don't they teach you what you don't want to do? Like that's okay, right?
That did teach you what I didn't want to do. Yes, I learned that was not a place for me or anyone for that matter.
Dude, I interned at Merrill Lynch. You know what it taught me? It taught me that I didn't want to work at Merrill Lynch, right?
Yeah.
Can you imagine me at Merrill Lynch? Dude, I wouldn't last 2 seconds at that place. Especially now. Back then, maybe, but no way. Dude. Kidding me? Could you imagine? I'd be on the cover of the New York Post. Technical analyst arrested for punching chief strategist because of yield curve.
Yeah. All right. So so to me, like this chart right here, this means more to me than the three you just shared. The three you just shared are interesting because I'm other people are probably not going to be looking at those as much, so that makes them interesting because you're looking at them, and I appreciate that. But this is the chart that everyone looks at, right? Everyone is watching these two things.
That's what. I think for good reason.
For good reason.
So here's the question. Let's talk about another binary situation. Is this a massive top in technology and semis are going to catch down, as happens in bear markets? More things start falling, right? Not less, not fewer things start falling. More things start falling. That would be a big break, and semis follow. Or is the strength in semiconductors relative to technology an indicator that this is going to be coming back and technology is a buy? Is this a leading indicator? Right?
It has been, has it not? Has semis not been a leading indicator for a while?
100%.
Yeah.
100%.
So again, there's no reason to think that would change. Like there's nothing special about right now to suggest that would change. So yeah.
I'm with you. And then throw up the next one. And then what's going to drive these technology? What's going to drive it? And then here you go. It's mega cap growth. And what do you know? There's the Mag 7 right at the freaking anchored VWAP from the lows last year. Right there. Right there.
Like as far as I'm concerned, this is great. Like
60. And what was Monday's low? Monday's low was 59.86, dude. Are you kidding me, man? It's right there. There it is.
This is great. You've had 8 months to like get more tech exposure without chasing. This is awesome, right?
It's gonna be those software stocks. Are they gonna dig in? These software stocks, are they gonna dig in? That's the big one. I mean, they have so far. Even Adobe with the retest. I mean, I got to tell you, these setups, Salesforce,
Yeah, I mean, software has a low. Very
now looks good. Some look better than others, but they all have a similar feel. I like that double bottom there in Adobe. By the way,
they all look the same. They all have tradable lows from 2 weeks ago or more. Almost a month ago.
No, I mean, listen. I just want to give a shout out to everybody in the chat, guys. We don't know what the market's going to do. Spencer doesn't know. I don't know.
I definitely don't know.
We're putting money to work. We are, as Annie Duke says, we're trying to make the best decisions we can make, knowing we have incomplete information, right? Like, that's okay. We understand that. But it is so much cooler to be doing it together with you guys and being able to share ideas, right? Watch this. Thanks, Morgan. Everybody say thanks, Morgan.
Thanks, Morgan.
Isn't she the best? Morgan brings me Dunkin' Donuts. Shout out to Morgan. Imagine being married to me, Spencer.
I couldn't.
She loves Spencer.
Not that I couldn't be married to you. I couldn't even imagine being married. I'm not even going to go there in my brain.
She loves Spencer and loves Strazza. Big fan of both of them, Morgan.
I appreciate that.
Yeah, big fan.
Yeah. All right. We'll have John Salama hop in a couple of minutes. We'll bring on Kenny Glick before that, and then after John, we'll have Mary hop in for a few. And Strazza is here, by the way. He's just kind of lurking backstage. So Strazza will hop in here as well. No, as far as I'm concerned, this is awesome. Like I said, you have had all this since last summer, basically, to look for more tech exposure without chasing and take your time. And
I bought tech this week, by the way. Have I told you? I think I told you guys yesterday, right?
Yeah. So
I bought a tech stock this week. It's working so far. We'll see if it sticks, but I'm in. This is my first tech stock. My first tech stock in a minute.
So there's two things that I'm balancing in my head right now. There's this idea that like tech has been consolidating and it's been a great time to put on some new positions. And then there's the other idea that Weitzel's been putting out there repeatedly, which is that everyone is massively offsides in terms of everyone in the US, I should say, massively offsides in terms of their tech exposure and their US exposure. And you need to look elsewhere. And I'm sort of weighing those two narratives in my head pretty much every day. Like, oh, I should buy more tech. It's been consolidating. This is great. Or actually, I already have way too much of that stuff. I need all the other stuff, right? I don't have any emerging markets. I don't have any, well, I've a little bit of energy, but not a lot, right? I need more. So I'm just kind of
there's no technology computer hardware ETF.
Why, dude? Why would there be? It would be.
There's a semiconductors. There's a software. So why wouldn't there be a hardware? What do you mean?
It would be just a bunch of like stodgy old tech stocks. It would be IBM and HP, Q and Cisco. Like you don't need that, right? Who wants?
I think you do. I think you do. I'm looking at the technology, hardware, and equipment sector index, the industry group here.
And what's in that? Microsoft, Apple,
question.
IBM.
No, I'll look it up here and see.
Printers and scanners and switchers. Nobody needs that.
I don't know why you're such a hater.
Dell. Yeah, Dell. That's a good one.
Why are you such a hater? Here, computer hardware. Ready?
Yeah.
American ones, right?
And if there is no ETF for it in today's day and age, but there's an index, it just means that nobody wants it.
All right, ready? Right. That's my fucking point, Spencer.
Okay.
Nobody wants them. Thank you. Hello.
No.
How long have you been hanging out?
Just because nobody wants a basket does not mean that nobody would buy like Dell, for example.
Listen, if you're out there listening, all you ETF dudes, right? You guys are listen. You guys are cool. I'm down. I like the ETF guys. I don't like low margin businesses, which is why I'm not in that business, but I respect it, right? If you're out there listening, create a hardware ETF. Why the hell not? We got the software ETF. You got your big tech ETF. You got your semiconductors. Why not hardware? All right, ready?
Yeah.
Arista Networks, ANET. SanDisk, SNDK,
right,
which is at all-time highs.
Okay, fine. I was not thinking about memory.
By the way, these are all $100 billion companies. Yeah. Western Digital, also $100 billion. Dell, also $100 billion.
Yeah.
Seagate Technologies, right. STX, $92 billion. Everpure, you're looking at $20 billion. Now you start falling down the market cap. So the big five are ANET, SanDisk, Western Digital, Dell, and Seagate Technologies. Those are the big five.
Are those all memory? So yeah, like
I don't know.
Yeah, I'm pretty
They're
sure.
listed as computer hardware. They're about $100 billion pop. And then if we go ex-US, You're looking at one company. You're looking at Logitech, Switzerland. Who knew that Logitech was Swiss? I didn't know that. Yeah, that's the only one. So there's just no hardware companies around the world. What's up with the rest of the world? They don't like hardware? What's the beef? Anybody know?
Kind of surprised Logitech hasn't done better. Actually.
Anybody know what the beef is? Around the world, nobody wants to build hardware. It's just not a thing. It's just an American thing.
What's the big that Ericsson is that's like mobile. That's not hard. That's not computer hardware. That's like mobile hardware. That's not.
And you got the communication equipment stocks, right? So around the world, you got Nokia and Ericsson.
That's Ericsson, and yeah, okay.
Dude, Ericsson. Shout out Sweden. I didn't know Ericsson was Swedish. Look how many things we learned today on the morning show.
You would know
things.
You would know that
Ericsson was Swedish.
You would know that if you watched.
I would know that.
If you watch more hockey, you would know that. Yeah.
Oh, really?
Yeah, Ericsson's like a common Swedish name. So
that I could see.
Yeah.
And then in the United States, when you look at the equipment, you're looking at Cisco, right? So Motorola. Shout out Motorola, not from Sweden. You got Ciena, CIEN, 50 Billy. You got Lumentum Holdings, Light. You got UI, ASTS, Hewlett Packard Enterprise. Now you start dropping off the cap scale, but Ondas is in there. So, I feel like hardware and maybe like communication equipment might be in a similar sort of position, or no? Is that fair? It's ton of relative strength. That Nokia, man, that thing's been ripping.
Really? I guess yeah.
Dude, Nokia, yeah, wow.
Man. That's going to be back at $10 soon.
Dude, where you been? We talk about that Nokia every week.
Yeah. I mean, it's come up, but I haven't looked at the chart or anything. Yeah, it's
yeah. So shout out to hardware ETF people. Yeah, you people. Can I get a hardware ETF? Huh?
Whenever I think Nokia, I instinctively think BlackBerry. I know there are different businesses now. BlackBerry doesn't do mobile anymore, but I always have to pull that chart up just to compare. But BlackBerry, not good. Let's move on. We got Kenny Glick in the house. Let's bring him out, and then we'll talk to John.
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
The Warlock on mute again. 3 days in a row, the Warlock on mute.
What are you wearing, man?
If you're going to have the intro, you're going to have the intro song. You got to come in hot.
What is that?
Go tell it to the mountain. Set my people free. What's up? What is this? This is the one thing I got from that website, Wish. So I ordered this thing. It was a jacket called the Warlock jacket. So I bought it, and it didn't come. I sent a strongly worded email. They sent me my money back, and a year and a half later, this wonderful thing shows up at my house. Great business model. Love it. So anyway, why are we having a good time this morning? Because we're short in the market, people. This is it. This is how it begins. Complacency. Everyone's feeling warm and fuzzy. Ew, and then a little test of the VWAP, and then we roll over. Ooh, what's that? Should I be afraid? Yes, you should be, because it's about to give way for another 38 points to the downside.
Let's see it. Let's see it. Show me.
Yes. Show me. Show me what you make it with. I'll show you what's at work. Hold on. Look at this thing. Look at this trade so far going on right here. This is your cues. You guys got it?
Yeah.
No.
Look how nice. It all starts right there with a little VWAP test from underneath, and then a rollover, and then a test of that exact same price because the market's rigged. And then you got a self. Now sing it with me. You got a 1 minute multi-day VWAP reversal. 1 minute multi-day VWAP reversal. 1 minute multi-day VWAP reversal right in your dumb bullish face. Boom. That's right there. And you had Fat Finger showing up right here telling us we're definitely onto something.
What time was Fat Finger Freddy?
Fat Finger Freddy, 8:01 today. There it is.
Right on time.
When the Qs were at 6:05, they had an outside print at 6:02.90. And look where we went.
Oh, it's just a coincidence that happens almost every day now because the market's rigged. It's only a coincidence.
Wait,
Ew.
Kenny, are those are those fat finger trays? Are those real prints? Or are those like busted?
Those are real prints. Fat
They are
finger
real
Freddy.
prints. The market is broken, and it's wonderful because now it's telling us where it wants to go, and it is just unfreaking believable. So I mean, I'm still covering right here because shorting is still short-lived, and I'm going to die. By the way, I got thrown off TikTok for the 11th time today because I said the market has a chink in the armor.
Okay.
Yes. It's a real phrase, friends. I'm not a racist.
It is a real phrase.
It's a real phrase called the chink in the armor. And apparently TikTok doesn't like that phrase. Weird. So anyway, weird. So I broke my record. I'm on. I think it's 12 times I've been thrown off TikTok.
Dude, not for nothing. There's something there. Like I've written some blog posts like bearish China, like back in the day, and like the next day the website's down. Like I'm telling you right now, man, there's somebody out there listening.
God damn.
Yeah, and then I write a letter. I'm like, it's spoof, and like the other day I was talking about running into battle with my sword, and next thing you know, I'm banned because it was violent. A criminally violent behavior. It's just, you can't get away. But on YouTube, I'm naked and I'm saying all kinds of racist stuff, and they don't care on YouTube. As long as you don't play unlicensed music on YouTube, you can do whatever you want. So
That's true.
It's just so sick.
That is true.
Well, anyway, I'm headed to Iceland, so better be afraid, people, because if this is what I predict, we're going to get a lot of this. The buyers are here, but the sellers are here as well. We're at 52.50 right now. It's going to give way, and I think it's going to give way in the next 5 or 6 days. So be afraid. Take that money right now. Put your stops on. We're not here yet, but we're seeing it, and it's going to give way. So let me show you exactly where we're going to go while I'm gone. So here's your 9-month VWAP. We're flirting with this again. Choppa, 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 choppa. I just think this is going to resolve to the downside. There's the last tariff. There's the last tariffs. We break that November tariff tantrum moment. We got a 1-year VWAP, which look at the artwork right here. Come on, you telling me we're not about to drop 30 more points on the Qs? It's beautiful. Right there. And then another 15 after that. So that's what I'm looking for. I'm now positioned for that. I'm in put spreads. I'm long SQQ. I'm even trading futures short. So if this is going to be the big one, I'm going to make some money while I'm away.
Hold on. Are you going to Iceland short?
I am going to Iceland short, but
Are you going to be in a cave with no internet? You're not afraid to get. You're going to
Penny, this is not a good idea.
I'm going to be in a bar with Brad Pitt with a headset on, trying to get a line from some bar.
Are you just going to set a stop like above the VWAP or something?
Well, it's all puts. Yeah, puts and long SQQ with stops on it. Everything I'm going to have is hedged if I can't get to a computer within 2 days. But I don't want to because I think it's just going to be a cascade of selling. And if I was here live, I'd probably cover too early.
Dude, Kenny's going to be short the market in a cave in Iceland next week, being like, dude, I don't know I don't know how much money I have. I don't even know. Dude, that's too much for me. I couldn't do that.
I am, but I wasn't even going to take a laptop. But now I think it'd be better if I do. Just in case.
Yeah, be careful out there, buddy. You're going to be a cave in Iceland. You're shorting the NASDAQ in a bull market.
I'll be skating on a fjord, short the Qs.
Try not to step in any volcanoes while you're there, Kenny.
Yeah, I know. I heard the coffee's really good in Iceland, too. I'm very excited.
They sneak up on you. All right, yes. Kenny, you'll be back, next Thursday, right?
I'll be back next Thursday. But, we're going to have an all-star cast in the website. I heard you got Sean's coming on. I heard JC might be doing some airtime. We got the Minotaur. We got obviously solid. Vaz is showing up. If you guys know about Vaz, she's all about volume profile. It's very interesting comparison to VWAP. So a lot of volume-based stuff we'll be talking about. Maybe Strazza shows up, talks about some Kardashian bottoms. So there should be lots of activity.
Kardashian bottom, man. There's a few. That emerging markets and the transports might be Kardashian bottoms. Or they could be the Great Whipsaw 26.
There you go. All right. Well,
the room will be open. Kenny, enjoy Iceland. And I wish you luck on your puts.
Try not to get banned from Iceland.
Yes, banned from Iceland, right.
I think
there's only
this isn't Brooklyn.
There's more people that live in Brooklyn than the entire country of Iceland.
Of course, I believe that.
Yeah, of course.
There's a lot of people. Brooklyn's huge.
Yeah,
there's more people in my town. Probably.
Yeah, it's basically like 4 miles wide, the whole country. So,
all right, shout out Iceland. Take some pics.
Good luck, everybody. Be careful. I will see you in about 10 or 12 days.
Nice.
Farewell.
He's gone. All right. All right.
Kenny Glick. Never a dull moment with Kenny. I couldn't go into a cave in Iceland short the NASDAQ in a bull market. Like that just
he did say he's doing it responsibly. He's buying puts. That if there was a way to do it, that's the way to do it, right?
Man, that's a lot for me. I just want to enjoy my cave in Iceland.
Yeah, I hear you.
My kids aren't old enough to be doing that. His kids are in college.
Yeah, that's right.
My kids are going to Chuck E. Cheese, bro.
Yeah,
you know, so like I'm not
going. Strazza, what's going on, sir? Good morning. How we doing?
Is Kenny saying crazy things again?
Well, he won't.
Would you expect anything less?
So
again, that's just a recurring question, and the answer is always yes.
Yeah.
Yeah.
It's why we love him.
Shorting is short-lived, and you're gonna die. At least he acknowledges there's that, you know, right? Steve Strazza, nice hat, buddy.
It's that time of year.
Going with the full hat today, not the visor, the actual head covering.
I like Batnick's take on how dumb visors are. I like that take.
Well, he's bald, so
he especially thinks it's stupid.
No,
I know, but he's not wrong though. I kind of like, you know.
I'm surprised it hasn't come back. Actually, a lot of things come back, and that hasn't really made a comeback, which should speak to how dumb it is. But
it's a great
I drank whiskey last night, Strazza. I know you're in the whiskey kick. I drank whiskey yesterday.
You had some Jameson for St. Patty's Day.
Not like in like a month. I hadn't drank whiskey like in a month.
How did it taste for you?
Same.
Yeah, same thing.
Yeah. You know, I don't feel bad at all today, so that's good. I mean, I had like 3 or 4 of them.
Nice. Yeah, good. That's great. You know, in years past, I would have been down at Irish Kevin's for the St. Patty's.
How's Irish Kevin's on St. Patrick's Day? Is it wild?
It's crazy as every other day.
But crazier though, more people. Irish Kevin's is like an Irish bar in Key West, right on Duval Street. The guy went down from Ireland one day and took Key West and then just never left. Just over the bar.
His name is Irish Kevin, and he literally still performs there. He owns a small chunk at this point, but he still performs there. So I had to do it. I was at the farmers market this weekend, and it's one of these, you know, it's cheap art, but it's called Pubs of. And this is all of the pubs. You see Irish Kevin's. Irish Kevin's is, well, no, that's the Green Parrot. Irish Kevin's is right here. So it's all of the bars on Duval Street. I said, that's so nice. And Rose was like, that's terrible. I was like, I'm going to get it anyway.
I like it.
I like it, Steve.
Hey, listen, we got John Salama in the house. We got to bring him out.
Bring him out.
Right? Yep.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Salama.
Hello, John.
Good morning, fellas. Good to be here. How's it going?
It's good, man. You in the city today?
No, tomorrow.
Oh, I was gonna say, meet me out. We're gonna be out later. I'm speaking at Fordham today, with Jay Woods. You know, and so we're gonna go out after, right?
Not for nothing. I'm in the city tomorrow. I think maybe.
I mean, I'm with Kane. I'll text you out, Spencer.
50-50.
John, you and Spencer can have a mandate.
Yeah.
Let me ask you something. Since we're all here, I was going to ask Strazza, but Salama, you too. So I'm talking with the kids at Fordham today. What should I tell them? Chat, what should I tell them?
Know your time frame, buy the dip, longer term. But I got so much to react to from Kenny. Just tell him about Kenny's jacket. I don't know.
Like, do you think I should get into the Ray Dalio, like Holy Grail stuff? Because like to me, like it's really powerful. Or is that a little too aggressive?
That's too aggressive. The stage gets into World War III. What are they, freshmen? Let's take it easy.
Isn't this
I think it's the Masters.
course?
No, it's the
this is
MBA.
a CMT course, right?
It's a technical analysis course.
Well,
They're not like these aren't nursing majors.
I figured that much. Okay.
No, but you know what I mean? Like, it's not like this other planet. Like, it's finance, you know?
I would repeat what Batnick said.
Jay Woods is the professor. He's the floor governor of the New York Stock Exchange. Like, they're not dumb.
So they're learning technicals already in this course.
Yes.
Oh, then, yeah, I got nothing for you. Good for them.
Do I get into that then? Do I get into the Holy Grail stuff?
A little bit.
No, I wouldn't.
What about the magazine covers? Should I show them the magazine covers?
Yeah. Talk to them about sentiment.
That's a good one.
Yeah.
Do I get into like momentum and trend following? Yes?
Depends how long you're talking.
That's a must. That's a must.
Well, so of course, Salama's like, yeah, duh. Of course, Mr. Trend following momentum guy over here.
Relative
Companies have
strength.
sucked.
And then some sentiment, psychology, behavior, that sort of stuff. Yeah. All right. That'll be a fun conversation.
You know what you're gonna do.
How many drinks should I have before?
4 Jamesons.
4 Jamesons. No. I'm not drinking Jameson.
Liquid courage, 1.5, 2.
I'm going to a kosher steakhouse before.
You call that a show drink?
Kosher steakhouse. Dude, kosher steakhouses are awesome. And my theory is because it is such a pain. Like, it's so difficult to make kosher steak. There's so many steps that you better make a freaking great steak. You know what I mean? Like, you're going to go through all that trouble. It better be good. So I love a good kosher steakhouse. And I'm going to one today.
Nice.
Say hi to Rachel.
Yeah, she's going to meet me later. Okay, guys. What do you guys think? I mean, is this the great whipsaw of 26 that we're going to be telling our grandchildren about? Be like the Iran and the whipsaw, massive failed breakout in small caps and emerging markets, and the world just fell apart. Is that the story we're going to tell?
I'm not so sure. I wish I had clear conviction here. I have Kenny, and that was good to see that he was, going into another country. Sure, I have you. What I hear a little bit bullish here. Like you said, we're trying to put together puzzle pieces and high probabilities, right? That's what we're trying to do. I don't think software. I got a couple things to contribute to. Then we can pull up the charts. You're talking about software catching up, or tech rather, versus semis, right? Today's a big day for that with Micron reporting after the bell. Probably stock of the year. Thing doesn't matter.
But does tech have to catch up to semis, or can semis just keep leading and then tech just stops falling?
Just like there's differentiation, in my opinion, in the indices due to their exposure to software, energy, financials. Every index, honestly, is going their every which way, at least this first half of this year, if not the entire year. Tech has all still not massively weighted, but it has those crap companies like Monday.com, Trade Desk, etc. Semis don't. They have those killers that we're talking about, Intel, Micron. So it's almost like a flight to quality where the semis are going higher. You're talking about like Spencer saying, I could buy more tech. Yeah, but what kind of tech do you want to buy? And do you have like a 30-year horizon? XLK will probably, be okay. I'm talking about this year and such. Like this stuff topped on Halloween while the semis still continue to go higher. So there's a differentiation in terms of flight to quality, semis versus tech. So it's hard to answer your question because I do see them kind of going different directions.
Why is there no hardware ETF?
I put that in the chat. XTH was run by State Street. They shut it down in 2020. That was the hardware ETF.
Yeah, we did have one.
It was HP, it was Dell, it was IBM. They shut it down.
There's some great names in there. And then if you add like the communications equipment, why are those? Is it just because there's so much demand for AI and all that stuff that you need the hardware? Like it's just math? I mean, why are all these hardware and equipment companies doing so well?
Well, they were trading at bargain like basement multiples, which is where we started. I mean, it's amazing. A year ago, stocks like Micron and all these memory and RAM companies were a complete afterthought. No one ever talked about them, thought about them. They were secular laggards in the space. Now all of a sudden they're the best companies. It's been that way for over a year now. But I think they were coming from a very low level.
And then 2020 also, don't forget, we had the supply chain disruption. Everyone was having semis in their basement selling it for 5x. And folks, I bet you State Street said, nobody cares about Dell right now. No one's buying laptops. We did that already. We bought washers, we bought dryers, bought the laptops. Let's go into the services.
I remember the COVID days having to wait like 7 or 8 months for some NVIDIA chip that I needed for my computer. And I'm not a big tech person.
I remember that.
That supply crunch was real.
All right, let's put up some charts whenever you guys go. I brought 5 that are talk of the town for sure the last week, if not the last 2-3 weeks. You could go whatever order.
Let's see them.
I'm sure you guys have already talked about them, but all right, I'm an ETF guy. Like that's why I knew your answer to your question about the hardware thing. So I'm going to pull up ETH, the most liquid Ethereum ETF. Although I know I was going to attempt to put up Ethereum, it is a little bit different in terms of the rising to the 200 moving average, obviously due to the lesser sample size history that ETH has. But this is very interesting. So this is a 20% bounce off the bottom. When you see liquidity being freed from the market, a little bit, literally that pressure relief valve, it's been going into Ethereum. Ethereum was the whipping boy. I used to make fun of it, lost subscribers and all that. Biggest loser in the week, multiple sigma almost every day, down 8%. You can see the candles in there. This thing's been in purgatory, sub 50 RSI. Forgive me, the dating is not on the bottom of the screen, but it bottomed about 2 months ago or so, a little bit less than that. And now it's finally above 50 RSI for the last day or two. I think it may have a little bit of room to go as long as VXX is in a downtrend. Volatility overall, which we'll get to in the next chart, there is a little bit to the upside, but this has been a monster rally. I said before, my threshold's just higher. I literally signed off the other day and I said, I don't care. And I was talking about this with Chris. I said, I don't care about Bitcoin until it gets to at least 81. He goes, 74, big level here though, right? I was like, I kind of don't care until it gets honestly to 81. My threshold's just a little bit higher. Like, don't fake it till you make it. Prove it to me. And that's the same thing with here with Ethereum, just getting to the 50-day moving average, which is about 3-4% higher from here. I'll give you that monster rally, but I am looking at Ethereum in terms of the risk valve of the market. I think it's directly correlated.
You know, I've been trading the hell out of these things. All the crypto vehicles. I mean, Coinbase, obviously, and friends, Ether, even the Biminer.
Mm-hmm.
For me, I'm in it with the mindset that this is a counter trend move, right? Like, would you trade something like this off of a tactical base like this, or you're waiting for stuff like overbought momentum readings, long-term moving averages to turn? Like, how low is your bar when it comes to a mean reversion setup like this?
Yeah, great question. So you can chase it right here. I would do a 2 ATR. That's pretty much what the turtle system does, and I've been following it, and that's what's got me up double-digit % on the year, and it's been working. Although the last couple of weeks have sucked. Yeah,
nice.
Oh, I heard. Did you have a question? I couldn't hear something.
No. I'm just rooting you on. That's
gotcha.
Great.
Oh, and the 20-day moving average is starting to curl higher. I just think it runs that energy here. And honestly, look at the RSI. I didn't put the stochastic momentum mix, but this is kind of where it's peaked in terms of RSI, in terms of that animal spirits enthusiasm, since basically 2 months coming off of the all-time highs back to that euphoria back in my goodness, August, when this thing looked undefeated. So
yeah, this is a big momentum surge for something that was recently oversold. That's in a bearish regime. Something like Coinbase, though, I mean, if you dig in to the crypto equity space, Coinbase up 50% off the lows. You won't find many other stocks in the S&P 500 that have done that well off of the recent lows. Even this Circle, have you seen Circle up 100%?
Yes.
Earnings report. So I think from like an intermarket standpoint, the tide might be turning for cryptos on a primary trend basis, but you got to see it from the big blue chip tokens, of course.
Yes. Yeah, it's possible. I think we're early. I don't think, honestly, I did a lot of overlays. I'm not a massive overlay person, but I did the repricing of software versus 2022 and now. And I still kind of think, I wrote a long piece about it like 2 months ago or a month ago. I still think crypto needs like another 3-4 months. I don't think it's ready. I'm not saying it's going to 45K in Bitcoin, but I just don't think it's done yet. If there's de-escalation, and we'll get this in the other charts, the picture can change, but I don't think it's ready yet due to the correlation with software repricing.
And you feel the same way about software. You think software's got like a retest of the lows in it? Probably.
Yeah. Let's see. I brought another shot. I don't think it's done yet. I just think the AI is going to get better. I think there's going to be more Anthropic releases. And I think more companies like Monday.com and Trade Desk have ugly guidance when next quarter comes out. And that's going to reprice. And you're going to need to do the rebalancing of the queues to do that.
There are going to be more Anthropic releases. And this is something I'm watching very closely, is not whether there's going to be more Anthropic headlines, but the reaction to those headlines. It's almost like an earnings reaction, right? You want to get to a place, if you're a software bull, where Anthropic come out, put out their disruptive headlines, and the stocks aren't getting hit 4, 5, 6, 7% in the day, right? They're holding on, resilient, maybe even moving higher, right? Bucking the trend. That's what you want to start to see, is a big sentiment shift in software. Otherwise, I mean, there's a lot of bombs that could still go off.
Yeah, and who knows about, like, I saw XAI is teaching Grok to do financial modeling on CDS this weekend. Elon Musk was tweeting, I think.
Grok is amazing. I drive around in my Tesla, and it's like I have like analyst meetings. I'm just talking to my Grok for 10, 15, 20 minutes, driving Rose crazy. Like, and we're going deep. Like, we're going deep into the numbers. We're diving right in, and he's helping me like break it all down. We're talking about space stocks yesterday on the way to Publix. It's really good.
I can only imagine what it's capable of next summer. All right, you could throw up the next slizzo. All right, so this is volatility. This is for all those people that think technical analysis is astrology. I was going to name this whole segment if I could. Technical analysis, TA, is not astrology. Look at VXX. I know it's always difficult to chart a 9-time series. They borrow. This is different in terms of cost of how you run this ETN.
Yeah,
but look,
VXX.
VXX, yeah, the short-term futures ETN note. Look at the rally that it's had recently. Look at get to the 200-day moving average. That's when the hair on the back of my neck start to stand up, and that's of course when the war started. That didn't happen back in January when the Venezuela capture happened. And we're in this different kind of regime. And look at the RSI on this puppy. A little bit of curve fitting, but we're above 45 RSI ever since that tranquility, basically, of volatility in the market that ended early mid-January. Once people really started sniffing out emerging markets over SPY, I can't bid every company here in the U.S., the hyperscalers, $8 trillion apiece. Like everyone can't be Google. They're saying, maybe there is more overseas. And look at that VXX. As long as it's in that overall general downtrend, there's the only thing I have disagreement with Kenny about, the bottom's going to fall out. That's what I want to see, this chart, but it is elevated vol. I don't love that. You look at how much worse it was through Liberation Day last year, and where did we go? We resolved higher. So the sun will rise again. It's often darkest just before the dawn, yada, yada, yada. This is what you want to see, though, but I don't want to see a 53 RSI on VXX when S&P could barely hold 50.
You make a good point, John. Back in March of last year, we spiked to right around this level. But I'm looking at the actual VIX index, but we spiked right to 30 in March. Gave some back, like we have over the course of the past week and a half here, and then the VIX spiked back above 50 or 60 on the big final sell-off.
Yep.
And you think international markets are fine if the VIX keeps spiking?
No, I wouldn't say fine.
Okay.
I would not say fine. I'm saying it's unfortunate. I caught South Korea, Japan, Nikkei in January when trading was so much fun. Felt like I had more hair on my head. The gold and silver move, it was wonderful. And then the last month, honestly, has just sucked. To be straight up, straight up with you guys. I'm long Shield, the SHLD, Shield Defense Tech, which has a little bit of risk premium come out of it. And I'm short the KRE and I'm short Jets because of high oil. Jets is going to go down, and if it stays up here, and we'll get to that chart soon. And then if there's kind of consumer discretionary takeoff to the downside, Jets still goes lower. So the market's on my side in terms of that. I know I saw the Delta CEO say guidance is up for later this year, et cetera, et cetera. But I'm following the chart. And like your boy Sean McLaughlin said, if you follow price long enough, the narrative will follow you.
The Shield looks fantastic.
It looks like gold. Yeah, it's absolutely holding. They're not even thinking about selling that. Oh, yeah, also FOMC today. An event I know you guys watch closely too, but what are they going to do? 2 cuts end of the year, and I think that's why small caps are still staying afloat. Here is oil. This is interesting, very important. I think the market is telling you that either this war is going to last longer, or this is a structural repricing due to the amount of tankers that are going through the Strait of Hormuz indefinitely. This is not when Besant allowed the Iranian tankers to go through on Monday, diplomatic move or not, this should have sent oil lower. I don't want to say significantly, but a little bit lower. That should have been a move. It's still holding right here, like JC said, getting very close to highs. And Brent actually is, I think, at new highs. So poor Europe and those importer nations. India, 52-week lows, third largest importer of oil, 52-week lows in India, especially the small caps and the consumer. So it's a mess if you're dependent. So going back to your question, do you like international here? If you're importing like South Korea, very unfortunate. It's going to cost you an arm and a leg.
Yeah, energy is so interesting here. I knew you were going to bring some oil and gas charts. This is right up your alley, right? Because this is a long-term, secular breakout, and this is to be bullish on energy here. It doesn't have to be anything to do with the war, right? Because the war stuff started 3 weeks ago now. Look at how energy stocks were doing in January and February, long before any of that. Right? There's already something brewing there, something very bullish brewing there. XLE breaking out of one of the biggest bases you could find in this market, ahead of all the war stuff. The war stuff was just like the cherry on top. And in fact, since the war broke out, something like Exxon, pretty much just sideways, right? Still haven't seen that, next leg higher quite yet. But the resilience here in crude oil and energy futures really stands out. And to me, says that next leg higher is probably coming a lot sooner than we think.
I think XOP hit highs yesterday, didn't it? That thing's still running.
XOP, yeah, and XOM actually made a new all-time high yesterday, and looks like it is again today too.
And I remember talking about this with you guys on Spaces for the longest time. When is energy going to get going? When is energy going to get going? My easiest indicator, easiest thing to trade is the breakout. And you can do it on this chart. You can do it fractally on a 30-minute, on a 5-day. It doesn't matter. When you have a breakout against a former area with an overbought, that's it, off into the races. And ironically, that happened right here with the smart money. It was like February 29th, March 2nd, right before the war started. And you didn't have to be in this USO trade for a whole year. You could have bought that breakout right there, about $85. Boom, got you to today to 119. You didn't have to suffer for 11 months with a flat 200-day moving average. You didn't have to.
Right. So how are you playing it? Using any equity vehicles or just the USO? Like, how are you doing your exposure here?
Honestly, right here, it was I got out of it before. I got out of it 2 days ago once that candle happened, and now my play on it is short the Jets synthetically. So that's the way I'm playing it.
Okay. Yeah, great.
So a little bit of second order thinking. USO is just, it's really tougher here. If you wanted to, you can get in right here and chase it and do 1.5 ATR. If it goes against you, I would get out. It's obviously very wide volatility. It looks like at any kind of de-escalation, this is going to 100. It's going to be significant give back, like a silver relief valve. But you need a statement out of the White House.
And I like the airline short. I think that makes sense for a lot of reasons. I mean, they got the TSA stuff going on too. I hear you can't even like get onto your airplane in the from these airports these days. Absolute madhouse. So it's unfortunate for the airlines, and they're terrible businesses at the end of the day also.
Yeah. All right. What's the good stuff? What is this one? The gold miner. So this is a safe haven. They've let go of this. The energy, I think people get this, but in case they don't, excuse me, the operating leverage for these guys have sucked, obviously. They have massive energy costs. So that's what happened with these guys. When oil goes up, it's not folks just deleveraging out of gold miners, which is the number 3 trade year over year, up 70, 80%. Look at that beautiful chart, 200-day moving average. I love the trend line. I was actually telling subscribers the other day, sell the 90 puts. Just keep going, and then worst case, you get assigned that. One GDX at 90, which has been a level from that's held since all of 2026. I love that. So you don't get paid a massive amount. So obviously check the margin that it restricts in your account. But I like selling the 90 puts. You can go 3 weeks out. Be careful if you go, selling May or something. Position accordingly. Some people, obviously, the gens want to sell the puts to buy the calls. I don't hate that either. I think it's going to get going. If Kenny's right, this thing I think goes higher.
Now, if you're selling puts in something like this is a little spicy, what you're talking about. There's some spice on this.
Spicy.
You got to protect yourself to the downside. Like, would you cut out at those pivot lows? Like, we're testing them right here today. This looks top, John.
I would do the spread. I would sell the 90 puts and buy like the 88s against it. You're not going to get rich on this trade. You have to be able to sleep at night. I don't want to see something. This thing moves. There's a massive ATR. It's selling 50 RSI. They're selling first, ask questions later. I got it. But the thing, I don't think the story's changed. I love charts like that. You got to give. That's Michael Jordan to me. You give a dog a bone. He had a 4-point flu game. It's okay. He'll come back. That's gold miners right now.
Yeah, and there's already been a corrective wave kind of taking place here. You could say all year. Something like silver, middle of January got hit. It's been sideways since. But look at where they came from. The underlying trends here for silver and gold, undeniably higher. Strong underlying uptrends.
Yes.
And that's your bread and butter.
Yep.
What's next?
Let us see. And this is very similar. Look at the chart. Very almost identical. And aerospace defense has nothing. This is very close to shield. Beautiful chart, just going back to Liberation Day, essentially, when it was under the 200-day moving average. Still under 50 RSI here. I like selling, if you want to. This isn't super volatile. You're not going to get paid handsomely like the GDX. But I think you could also sell those 220 puts, buy the 215s against it. This is going to hold more margin against you considerably since it's a $200 stock, even though it's volatile.
And you've probably been in these aerospace and defense trades for a while now, right?
Yeah,
this is, again, I would say, this isn't a war thing. These groups have been working, the SHIELD and XAR ITA, right?
Absolutely. Yeah, this is a 1-year chart. You could have gone 2-year. All these defense budgets are higher through the decade. Right here, that came out the last 3 weeks was that excessive risk premium that's now coming out. I'm not saying this is going down for the year. We're just truly, the rubber band went way too far on one side, and then let's see how it rebounds. But I still like the floor on there right around 220.
You're sticking with, economy stocks, an industrials tilt, and you're not ready for the technology. No growth at all for you here. Nothing interesting in the growth space.
Palantir associated. I mean, if you get a little tailwind from the AI, you get a little bit of both. So you get the defense, and then you get a little bit of AI. But honestly, I'm telling you, my portfolio, I'm so bored with it. I got stopped out of soybeans. All my stops are determined beforehand. I was really in the hard asset regime when this whole war thing started. So March has been a snoozer, still up, thank God. Have a system, better to be following it than just being right. But it's been tough. If you don't have a system and you're used to taking like 7% losses, you're getting taken out back in this market. Easy.
Soybeans still look good though, John. It's a nice piece.
I might get back in. Absolutely. I'm just saying I got stopped out. It's been very frustrating. The stops have not, and this is what tells me I kind of side with Kenny on this. The stops haven't taken me out. I'm still in SHIELD. I'm still short KRE. I'm still short Jets. The system didn't take me out. So that's not great for the market, those things. If the Fed says anything, hawkish today or anything like that, and Micron just as demand is, subsiding, I don't think they will, but you know how hard it is. Micron's priced to perfection. Perfection.
No, it is.
60% this year. We're 3 months in.
Gone up a lot. And if you just look at like the big boys in the space, Nvidia and Broadcom, there's nothing Jensen Huang could have said the other day to make Nvidia stock go up. There's nothing. Couldn't have said anything more bullish than this big red candles.
Do you think, in terms of, I always love at least suggesting pairs trades. Sometimes I don't put them on because it's antithetical to the system. But what do you think? I haven't seen a trade like this in a long time. Long semis, short tech.
Look, if you're leaning into the long term, the primary trends, I think long semis, short software. You're betting on a retest, right? Just go to the weakest group. I think the Mag 7s, I look at so many of these charts, and I remember when they were cycle leaders. And then late last summer into the fall, a lot of them, most of them just started going straight sideways. Mm-hmm. So when I look at those patterns, the individual charts of the individual Mag 7 stocks, I'm zooming out and I'm saying underlying trend higher. These are probably continuation patterns, not tops, but you got to see it. If more and more start looking like Microsoft and Oracle, it's not a good thing. I think in that case, being short XLK would work.
I'm looking at, the Halloween peak. One last thing on this. I don't know how much time it's. The bell just rang, but really fast. Like, the market looks more and more excessively tired. That Halloween peak in tech and Bitcoin a couple weeks before is starting to look like, I don't know if we just need 6 months off and then, be bench warmers. But I'm starting to see more of the, obviously the S&P still has a rising 200-day moving average. But if you look at some of the MAGs and, the XLG, the S&P 50 or the OEF, the top 100, things are starting to look like this ensuing rally, whatever we have in the next couple of weeks, will get us to about that 695 in SPY, which is a massive move from here, 4.5%. And then we'll start going lower. So that old, that resistance to me is kind of becoming a little bit more cemented. Whereas before we're like, new all-time highs in March. And then, of course, the war happened.
Yeah. And how much are you looking at like levels in the broader market or, big resistance or support zones at an index level, and then kind of flowing that through to your risk management or position sizing? Like, are you looking at like SPY, for example? 675 was a big level, right? Tactically speaking, tested it like 4 or 5 times since late December, finally broke it last week. Now it looks like, testing it from below here this week. If we're below that level, then do you look at all the stuff you're doing, saying, lighten up or kind of take it easy, or are you treating everything on its own merit?
All the indices really are moving on their own. Qs because of their, ugly stepsister in software. S&P because of the bigs. Apple, Microsoft looks like crap. IWM because of the explosion, financials, and energy. But that 660 level in SPY, if we break under, I saw Mike Hartnett, chief investment strategist of BofA, said there's going to be a Trump put at 660 in SPY, essentially, because, going to the 200-day moving average. And he said we're resembling 07, 08 trading and on Friday's note. So I think if I see SPY 657 or 667, like say today after FOMC or something like that, I maybe get a little bit more aggressive. I don't want to shorten the hole here. It's one of the reasons why I haven't bought Fenny or IXC or Energy. It's at everything's like 75, 78 RSI, and it's a lot of digestion. Yeah.
And I think so. In terms of short exposure, you're hitting the banks. Did you do that like when XLF basically started completing this top a couple weeks ago?
3 weeks ago. Shorted KRE. When I saw KKR and Blue Owl start making repeatedly 52-week lows and whatnot, I said the KRE is almost always a pressure valve for credit stress. And I saw LQD and TLT always trading. The higher for longer seems like higher forever. I think real estate's frozen. There's going to be a massive shift, I think, this year in terms of hard assets versus digital alpha in terms of where you're allocating your portfolio.
I think you've already I think it already started. You know what I mean? You're already seeing that transition. Hard assets can't really be disrupted by AI. Hard assets.
Yeah, that's
not yet.
It's hard to AI. It's hard to clog soybeans.
AIs can't build planes and shit. You're right.
Not yet. John brought it today, man. You came to play. We appreciate it always. Maybe I'll see you tomorrow in the city. But thanks for coming on today, man. Appreciate it.
Pull me up. Absolutely. Good luck today, guys. FOMC, Micron, all that jazz.
Oh yeah.
Thanks,
FOMC and Micron. Big day. FOMC and Micron. We don't care about FOMC, but we care about Micron. We got Mary in the house. Mary is a frequent frequently requested in the chat. Where's Mary? Mary's here. So I'll bring her out. She sent over a few charts, as she is known to do. She's scouring our universe and saying, I like this one, I don't like this one, I like this one. And she's got the credentials to do it. So let's bring her out. Hello.
Good morning.
How we doing?
Wednesday
Doing very
mornings,
well.
Mary.
Mornings with Mary. Snowy morning here in Michigan. I don't know if you've heard, we're basically like snowed in. Like the UP got like 4 feet of snow. Insane.
This is to be expected. This is the one
This is
last
Michigan.
middle finger. This is the one last middle finger of winter in Michigan. You get it every
thought
year.
you made it. You were so close.
I have daffodils and hyacinths coming up out of the ground that are now buried in snow. It's just what happens. Tulips too. But they're hardy, so they'll be fine.
What are you gonna do?
Spring is right around the corner, Mary.
Someday.
What do you like out here?
Well, so I have been the last time I was on, I was talking a lot about energy, of course, also about software and really crypto. Just kind of like I was taking kind of the stab at the software space of this not being a top. Crypto has been coiled for several weeks. I've been in for several weeks. So now it's just kind of been managing these positions and just kind of waiting to see what happens. I didn't bring the chart, and you've got the Ondas up here, but before I go to the Ondas, just John was talking about this. I know you guys have been talking about this long ago, back in 22. JC, when we started to have that turn, he did a conference call, and this was when I was learning, technical analysis, and he mentioned the 10 moving average on the S&P 500. So I have that on my SPY chart, and he basically said nothing good happens under the 10 monthly moving average for the S&P. And so that's kind of what I've got on my radar right now, because we're about halfway through the month. We've tapped it a time or two. It's right there at about 665. So I'm waiting to see kind of where we go from here. I'm kind of sitting on my hands right now just to see how things shake out. I'm, like I said, managing the positions, but that 10 moving average, also, the tops that we've been talking about, do they actually become tops and start to break down? I just haven't felt as bullish as normal. With that said, I'm still, of course, looking for trades, and now you can throw up the Ondas chart. So this one triggered yesterday. I got the alert. One of our guys on the team, Riley, loves this chart. I hear him talk about it all the time. So he's like, right, Ondas is looking spicy, guys. Hey, have you taken a look at Ondas? What do you think about Ondas here? So
yeah, he's been known to say that. Yes.
He has been known to say that. And, Riley, I sat next to Riley at one of our portfolio accelerator events, Toronto, and he put Pony AI in my ear. And so I took a trade on that back in Toronto. Yep. Had a great win on that one. And so I like to take Riley's stocks, and I like to put alerts on them. So this one, great little VWAP pinch going on here. And that's especially why I wanted to talk about it, because for me, it triggered yesterday as it was kind of going through the VWAP anchored from that high back in January. And so I like this one from, a shorter term, shorter than what I typically trade. I'm typically just, longer term. But for a short, quick trade, I like this one above, let's call it 11. I will definitely add to a position if it crosses over 15, because if you actually go out and look at a weekly chart, that's a huge base. Huge base all the way back from when this IPO'd. Above 15, you've got blue skies. So I really do like this one. You can't really even see it at the bottom, but you do have a little cross going on there at the PPO. And so this one looks spicy. We'll see what the day brings, and if we can close still above this VWAP from the highs. Another alert that went off yesterday, though not looking so great. Yeah.
This is great. Oh, great. Glad you're going here. We're looking at all the same things. So this is the single hottest thematic in the entire speculative growth space, right? Space and exploration. In terms of like their resilience, you look at some of these other ARChy stocks, like the quantum stuff, absolutely crushed, massive drawdowns since late last year. Space, all of these things, I know you're about to show another good one, high and tight here, high and tight. We have exposure to the space and exploration, pretty much all of our portfolios. We're looking to add even more because it's hard to find a group trending better with the beta that we like than the space and exploration and the drone stuff too. Here.
Precisely. Yep. So this one triggered yesterday again, got the alert because from that anchored VWAP high. And today not looking so hot. It's down 6% right now. But again, it's kind of this similar VWAP pinch. Price hasn't been trading. It's actually been below the VWAP anchored from November lows. But it's right there at that very obvious key line of resistance, call it, 73, 74. If we continue to trade above that, I think you've got a great chance of going long on this one and another PPO cross down there at the bottom. And to your point, we've been sideways. Bollinger Bands have become really compressed. Volatility has really come in. And so when we see that happen, I know, Steve, you're an expert at this, but when you see that compression, we typically get expansion in the direction of the underlying trend and directions up. So I like this one, not liking it so much today because, we're down 6%, but above that anchor VWAP from the highs, like about 76, I think you got to be long.
I think it's fine. A little inside day action, Fed day, yep. Big red open. This thing was up almost 10% yesterday. This is the level. It's okay that it didn't blast right through. You could drop like an intraday VWAP on the Rocket Lab because I'm looking at it right now. Wait for that to be reclaimed around $75 and maybe get yourself a nice entry there today.
Yeah. So I'm not in this one. Like I said, alert went off yesterday. I didn't have a chance to even get involved yet. So it's great buying opportunity because, like you said, it was up 10%. And I don't like to chase things. Another alert that went off, the last chart that I brought along today. Of course, I'm still digging around in the energy space because this has been already so good to me. In fact, I sold a double yesterday. I don't know if you remember, Steve, but year and a half, 2 years ago, we came up with the XLE trade that went out to December 26th. Sold a double on that one yesterday. So now I've got a free ride until December on the energy space. And I still continue to like it. I've been talking about energy since really the Christmas, I think. Awesome. And so here we've got Solaris Energy. This is one that we've talked about often, many times, and broke out above that 60 level. Just again, nice consolidation here over the last couple of weeks. And energy it continues to work. And so I go where my money is treated well. So SEI to the long side.
Yeah, this is one of the better looking charts out there. Fresh breakout energy, telling us that there's more gas in the tank.
Still got room to go. So, and what I love about so many of these trades these are all ideas that we have discussed as a team with our Portfolio Accelerator members. Like I said, some of these trades, like on this, I heard from Riley at Portfolio Accelerator. And I know we've talked about back in Miami, we were talking about energy specifically. And that was before we knew that there was going to be an Iran thing and all the things. And that's what I love so much about the community that we have built here at Stock Market Media. For me, it has been so influential in allowing me to become a CMT and to be able to have these conversations, to learn from experts. So, I just love that we have the community, that we have the opportunities to get together. And so we do have our next event coming up in May of 20 through 22 in Nashville.
We're 2 months away. It's
2 months away.
Yeah, it's here.
Exactly.
It's gonna be a blast.
It's going to be a great time. So that's one of my favorite parts about Portfolio Accelerator. Spencer, what are your favorites?
Oh my God. I mean, the fact that we exist as a fully remote company, I know we have a couple people that, we have some space in San Diego, but by and large, we are a fully remote company, and we only get to see each other a couple times a year. And these events are those times, right? So to actually get the FaceTime and see you people, right? Yeah, you people. To me, that makes the whole thing, worth it. It's just seeing people in person. We've talked about this before, and everyone who trades knows that trading can be a very isolating thing, very lonely. It's really just you and your emotions and your screen. And that's kind of one of the reasons we started this and started doing these events, is because we're like, we got to get out of the house. We got to see each other, right? We need to actually be in a room of 20 or 30 or 40 people and then have discussions and get away from our usual routine. So that's why we do them. We do them 3 times a year. As Mary said, the next one's coming up in Nashville in just about 2 months from now. So if you want to come hang out with us, I recommend you do it. But if you're going to look into it, you should probably act soon, because we do keep these events intentionally small, right? This is not a 100-person conference, right? These are very intimate gatherings. Like I said, about around 40 people, somewhere in that neighborhood, maybe a little more, maybe a little less. But we keep them small by design. And if you want to be there, I'm going to put the link up on the screen right now.
Yes, please do.
Yeah,
So I was looking. Go ahead.
portfolioaccelerator.com. Okay, that's the link. The link is on the screen. We do, like I said, we do these 3 times a year. We just had one in January, and that was in Miami. Now Nashville in May, September in New York. Next year we're doing maybe Park City. Talk about that.
We're doing a try.
Yeah. So
Are we trying that again? It's too cold. Nobody wants to go there.
That's the Florida man.
It may be cold. It may not be cold. Who's to say? Anyway,
ask me what my favorite part is.
Oh, I'm sorry.
I was going to get there. It's just
Spencer's
been talking for a while.
I kept on going. Steve, what's your favorite part?
Oh, JC's
my favorite
here
part.
too.
Oh, hey, JC. Is eating good food with my friends. That's pretty much what I travel for when I travel. The market talk is fantastic too, but really, I leave my house for one reason, and that's to eat good food with my friends.
You know what I'm looking forward to? I'm looking forward to sitting there with one Steven Strazza, drinking champagne and having Nashville fried chicken.
We're doing that.
And giving him a cheers and just looking him in the eye and saying, I told you.
Yes, I love you, dog. I fucking love fried chicken. I can't wait for that moment. I'm thinking about it already.
Dude, it's so good. We're gonna go down in the Gulch. We're not gonna get that cheap shit. What's the one that Spencer goes to?
I like Patty B's.
The one that I go to is the famous.
We're not going there.
That's the famous one.
Yeah. I got you, bro. You know what? I don't let you down.
We're going to JT's restaurant.
No, we're not. No, we are not. No,
I'm telling you right now, there's a spot in the Gulch. You get the shams, you get the fried chicken, you're good to go.
Can't wait. It's gonna be
Spencer,
good.
do you have that bumper so that people can kind of see what these events look like and kind of the goal of what we're trying to do here, and then we'll hit it.
I most certainly do.
Listen, this started out originally trying to get a group of people in an intimate space to be able to share ideas.
This is a very selfish endeavor, what we do here, right? We're gonna come out of this with to-do lists. We're gonna brainstorm here and be like, that's a good idea. And figure out how we're gonna do that, and then we're gonna go ahead and implement that. And we've been able to develop amazing strategies over the years by doing exactly this. And for those of you who are with us every week in our team meetings, you get it. So this is our team meeting on steroids with additional voices.
And at the end of the day, a lot of us in this room are making a lot of money. We want to keep that money. We want to look for opportunities moving forward to continue to add zeros and commas to our net worth.
Wow.
Oh, yeah.
Well done.
I'm hyped already.
I'm excited. Let's go. I'm ready.
And then we always say, we can't beat it. The last one was Miami, right? That's going to be tough to beat.
Best ever.
Well, I mean, yeah, for you guys.
Best ever.
Miami is your town.
Right. You didn't think Miami was the best ever?
No, Miami was great. I love them all. Miami was awesome.
New Orleans, Toronto was awesome.
Yeah.
They've all had their highlights, for sure.
Chicago was great. Chicago was great.
The Strazza had never been to Chicago.
No, it was the first time in the Midwest. That was crazy.
I would go back. Honestly, I would go back.
Chicago? Dude, Chicago's a good town.
All right, so that's the
Don't
link
go
in
in March.
Portfolioaccelerator.com. You should look into this now because, like I said, 2 months away, time goes fast, and you get this travel. And Steve was saying with the airports and the TSA, and you don't know what's going on there. So, you go to the link, check it out, talk to Mary, and we hope to see you in Nashville in 2 months. How about that? All right.
And then next spring we're doing Amsterdam.
Nope.
Oh, okay.
That's news to me.
That's the second international location that we've heard.
I think last week you said we were going to New Zealand, right?
Yeah. On Friday we're doing New Zealand, Mary. So now we're doing.
No, we got to do Mexico City.
I would do
easy
that.
one.
Oh, okay.
I would do that.
All right. Thanks for watching, everyone. Wednesdays are big days for us on the channel. Kenny is live at 11. Jeff Mackey is live at 1. Riley is live at 5. Much going on. Thanks for watching us. Go make some money. We'll see you tomorrow.
Adios.
Bye, guys.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my